The markets are currently closed, with the last recorded trading session ending Friday, November 28, 2025. Ondas Holdings Inc., trading under the ticker symbol ONDS on the Nasdaq, finished the week with a closing price of roughly $7.90 to $7.93, depending on your specific data feed, following a pullback of over 4% during the final active session. If you are watching the after-hours tape, you might see a slight tick upward toward $7.96, but the headline number you need to focus on is that sub-$8 handle. This creates an immediate psychological disconnect for anyone who has been tracking the stock over the last 12 months. We are talking about a company that has posted trailing 12-month returns exceeding 700% to 900% by some metrics, yet the immediate intraday price action feels heavy, almost corrective. This is where the tension begins. You look at a stock chart that looks like a launch ramp, but the daily movement feels like a stumble. Most retail investors, perhaps those trading casually on the Robinhood app or glancing at their Fidelity mobile app, see this recent dip and assume the momentum is dead. They assume the AI trade is rotating out or that small-cap tech is suffering under the weight of sustained interest rates. That is the expectation, that what goes up must come down, and ONDS is just another hype cycle deflating. The reality, however, is significantly more complex and fundamentally disconnected from that bearish surface-level take. While the average investor is worrying about a 4% daily drop, the institutional money, the smart money, often managed through platforms like Interactive Brokers or even high-net-worth Fidelity Wealth Management accounts, is looking at a completely different set of data points. The reality is that Ondas Holdings has quietly transformed itself from a speculative drone play into a capital-rich industrial conglomerate in the making. The recent news cycle, specifically the events occurring just days ago around November 25th and November 27th regarding the acquisition of Roboteam, signals a shift that the market hasn't fully priced in yet. We are not just looking at a drone company anymore. We are looking at a multi-domain autonomy engine that has secured enough capital, roughly $855 million raised in 2025, to potentially starve out its competition and acquire significant market share, while others are struggling to keep the lights on. This is the curiosity loop I want you to sit with. How does a company trading at $8 hold nearly $500 million in cash and short-term investments while growing revenue by 581% year over year? To understand why the stock is moving the way it is, we have to strip away the noise of the daily fluctuations and look at the system of systems strategy they are executing. Most people engaging in online investing or setting up a Schwab Intelligent Portfolio for exposure to robotics usually buy a basket of stocks, maybe some NVIDIA stock for the chips, perhaps some Tesla stock for the AI integration. They rarely look at the plumbing of the autonomous world. Ondas is building that plumbing. The recent pullback to the $7.90 level comes amidst a broader digestion of their massive growth initiatives. When a company grows this fast, literally triple-digit percentages, the stock price becomes volatile because the market has no historical precedent to anchor the valuation. Is it worth $8, $12, $20? The uncertainty creates the volatility you are seeing on your screen today. But let's look at the catalyst that dropped just before the weekend. Ondas announced the acquisition of Roboteam, an Israeli developer of tactical unmanned ground vehicles, or UGVs. This is critical. Until now, the narrative around ONDS was largely about the air, autonomous drones, the Optimus system, and the Iron Drone Raider. By buying Roboteam for $80 million, they aren't just adding revenue, they're adding boots on the ground, quite literally. Roboteam's robots are used for explosive ordnance disposal and intelligence gathering. They are deployed by Tier 1 defense customers in over 30 countries, including the U.S. Marine Corps and the Israeli Ministry of Defense. This immediately counters the argument that Ondas is a science project with no real-world application. These robots are in the field right now generating revenue. Management expects this single move to add $3 million to $4 million in revenue just for the remaining sliver of Q4 2025, and at least $30 million in 2026. When you are doing your self-investing research or checking your SoFi stocks dashboard, how often do you see a small-cap company acquire a verifiable $30 million recurring revenue stream that fits perfectly into their existing tech stack? It is rare. This brings us to the common ground where most bears and bulls meet, the fear of dilution. It's the elephant in the room. You cannot raise nearly $855 million in a single year without issuing a lot of shares. This is why the stock isn't trading at $50 right now. The share count has ballooned, which dilutes the earnings per share for existing holders. This is a valid concern, and one that typically scares away conservative investors using fidelity IRAs or strictly following value investing principles. The expectation is that this dilution will crush the stock price indefinitely. But I want to challenge that view. In the high-stakes game of defense technology and industrial automation, cash is oxygen. We are in an economic environment where capital is expensive. Interest rates are not zero anymore. Startups with great ideas but no cash are going bankrupt every week. By raising this war chest, Ondas has effectively ensured its own survival and ability to aggressively acquire distressed assets. They are using their stock and their cash to buy growth when it's on sale. Let's analyze the volume and recent price action more closely. On Friday, we saw volume coming in around the 32 million share mark, which is substantial. The average volume is significantly higher, indicating that this stock is in play. It is not sitting dormant in some forgotten corner of the Interactive Brokers platform. Traders are active. The stock has a 52-week range of roughly 57 cents to $11.70. Think about that spread. If you bought at the lows of roughly 60 cents, you are sitting on a lottery ticket. If you bought at the highs near $12, you are down about 30% and feeling the pain. This volatility is a feature, not a bug, of a company in this phase of its life cycle. The recent drop from the $11 highs to the current $7.90 level can be viewed as a technical consolidation. The stock ran too hot, too fast, and now it's backfilling to find support. We need to talk about the Q3 2025 earnings released in mid-November because the numbers were staggering. Revenue hit $10.10 million. That is a 581% increase compared to the same period the prior year. If you saw that kind of growth in Apple stock or even a high flyer like CrowdStrike, the headlines would be inescapable. But because ONDS is a smaller cap, it often flies under the radar of the big Fidelity mutual funds until it becomes too big to ignore. However, the net loss was still $7.47 million. They're spending money to make money. The operating expenses are high because they're integrating these acquisitions: Aerobotics, American Robotics, and now RoboTeam. Integration is messy. It costs money to merge sales teams, combine software stacks, and streamline manufacturing. But the gross margin story is the hidden gem here. Analysts are projecting gross margins to climb from the mid-20s to nearly 70% over the next few years as software becomes a larger part of the mix. Comment below how many shares of Ondas you currently hold or if you are waiting for a specific price target to enter. I am curious to see if the sentiment is tilting more towards buy the dip or wait and see. Shifting gears to the business model, it is vital to understand that Ondas operates in two distinct lanes that feed into each other. You have Ondas Networks and Ondas Autonomous Systems, OAS. Ondas Networks is the legacy side. They provide private wireless networks for critical infrastructure. Think of railroads, utilities, and oil fields. These industries can't rely on the public AT&T or Verizon grid because if the network goes down, trains crash or pipelines burst. They need secure, private, always-on connectivity. Ondas provides the FullMax software-defined radio platform for this. It is unsexy, reliable, and necessary. It is the bread and butter that pays the bills. Then you have the OAS side, which is the growth engine. This is where the drones and robots live. The Optimus system is a drone-in-a-box solution. It doesn't need a pilot. It lives in a docking station, wakes up, flies a mission to inspect a perimeter or check a gauge, and lands back in the box to charge. This is the holy grail of industrial automation. When you combine the secure network, Ondas Networks, with the autonomous robot, OAS, you get a closed-loop system that is incredibly sticky for customers. A railroad customer might start by buying the wireless network, then realize they can save millions by deploying Ondas drones to inspect the tracks instead of sending a human in a truck. This cross-selling opportunity is what has institutional analysts intrigued. It is similar to the ecosystem approach that makes Apple stock so valuable. Once you're in, you buy everything. We are seeing this play out with the recent Iron Drone successes, specifically the Raider platform, which is a counter-UAS or anti-drone system. With global geopolitical tensions rising, the demand for technology that can intercept and disable hostile drones is skyrocketing. The acquisition of Sentrycs further bolsters this. They are building a defensive dome capability that is highly relevant in 2025. Let's look at the macroeconomic pressures. We are in a period where the soft landing narrative is constantly being tested. If the economy slows, industrial spending usually cuts back. However, the industries ONDS serves,